Welcome to your daily dose of dividend. Luke made a request about Hershey's and Dollar General. We recently did Hershey's not too long ago, so let's take a look at Dollar General this time. It has a market cap of $52 billion and it operates in the discount stores industry. Compared to the S&P 500, during the last 10 years with its dividends reinvested, it has outperformed it quite a lot. For some fundamental data, sales growth 9.3%, very nice, that's a check mark. Earnings growth, real massive, 18.1%, that's a big check mark. Earnings estimates, a bit lower forward on, but still 11%, that's really good, it's a check mark. The return on capital is also quite high, over 12%, that's our threshold, is actually 14.7%, so that's a check mark. The debt compared to the free cash flow it's generating is actually quite high. They have very high debt, 7.92 years it takes for them to pay up the debt via their free cash flow, so that's an X. And I would probably be a bit careful on companies with this high debt ratio in this environment where interest rates are going up. Did they buy back shares? Yes, they actually are buying back quite a lot of shares, so that's a check mark at least. Now for some dividend data. The dividend yield is only 0.97%, so that's an X. The payout ratio is quite low still, so if they are raising it fast, we can get the yield up there, only 18.5%. And the growth rate is 12.38%, so at least, yeah, double-digit growth rates, nice. And they have been growing their dividend for only 6 years, so that's an X. That gives Dollar General a score of 7 out of 10 points. And if we take a look at the gurufocus.com valuation graph, we can see that it's in line with their valuation right now. So guys, what's your thoughts on Dollar General in a dividend portfolio? Does the high debt make you not invest, or is it a low dividend yield maybe? Otherwise, there is very nice numbers except of the yield and the debt. Let's also take a look at fast graphs for the current valuation and future estimates. So here in fast graphs we can see that we have data back to 2009, and I mean the earnings growth is just amazing. Its annual earnings growth rate is 19%, almost 20%. So this is a very profitable retail store. And yeah, maybe they have financed it with a lot of debt though, but still very nice. The PE right now is a bit high for a retail store, 22. But let's take a look at some forecasts. So if we believe it's gonna trade at the same PE, we have some forecast up to 2025. And here we can see that it estimates a total annual rate of return of 8.3%. which isn't the best, and you might also say that a discount retail store maybe might trade at some lower PE of, let's say, 16, and then you will actually have a negative rate of return. So at least for me, for this to be a bit safer investment with a margin of safety, I would probably need the stock price to come down to maybe the 150s. So yeah, that was it for Dollar General. Hopefully you guys liked it. And if you found this informative, please leave a like and subscribe to the channel. And if you have a stock request, you can make a comment in the section below. Have a nice time. See you next time, guys. Bye.